The only group of stocks that's making money right now in the world is basically the semiconductors, right? That's happening in the US and it's happening in China as well. So for example, in the US, another ETF, which I've been talking about with my Discord, it's called DRAM. Like basically I was talking about it around here, and now it's basically gone on like an almost 3x run to 90. This is like 81. It will be a 3x run soon. Well, since launch, it's been 3x. It's only launched April the 6th, 2 months. It's an ETF. The reason why is because it has 4 or 5 of the largest memory makers, chip makers in the world, which is Samsung, SK Hynix, Micron, SanDisk, and one other, I can't remember. And it's the same thing. Like that's why I was talking about the Korean ETF, which is EWY from memory. EWY. Basically, if you're not in, right, we were talking about it here. A couple of my folks in my Discord got in around here, got in on this dip, right? But then the wrong war, sorry, this dip around here, right? If they did and held on, that's great. But the Iran war probably shook some folks out. But if they did get in around this area, they've just hit a 2x. And this is also, of course, happening in China as well, where the main competition, or the only competition for AI models is happening. So this, for example, is the China Semiconductors ETF. So basically everywhere you look, it's the semiconductors. It's basically the AI hardware makers that's taking off. In fact, you could say the money is rotating out of, this is the Hong Kong Tech Index. The money is rotating out of the other tech stocks and going straight into the semiconductors. Now, this is the Hong Kong Tech Index. If we look at it, I bought the dip on this, right, over the last couple of years, this blue line, these big bottoms here, right, over 22, 2023, 24. It's had a very good run. Compared to the US, that's actually a very big run, right? That's actually a very big run. And then basically this year is pulled back for a couple of reasons. One, because a lot of money rotated into the semiconductors. And two, because the leading stocks in Hong Kong, in this China Hong Kong index of Hang Seng Tech, has been basically competing on price, doing a price war amongst themselves. Some people might say, oh, it's because the Chinese economy is down again, the consumption isn't great. That's actually not that true, because if we look at the China indexes themselves, this is actually the main index, the Shanghai index in China. It's basically the right call to buy in 22, 23, 24, say 23, 24, right? That's the bottom. And it's basically a big run. That's a big run for an index, right? If we look at a more wider index in China, this is the CSI 300 index, right? Also, it's the right call to buy in 24 or 20, 22, 23, 24 here. And basically it's had a big run, right? So it's almost doubled. The index has, gone up 70%. So, and let's have a look at Hong Kong. Hong Kong itself, if we look at outside of the tech index, here's Hong Kong, right? Bottoms 22, 24, and basically goes on this big run, right? That's also a pretty big run. That's actually a 2x run. Look, from 14,000 to 28,000, right? That's actually a 2x run in the index of the entire Hong Kong Hang Seng Index, right? What's causing this pullback is actually the tech index themselves. What are the leading stocks inside this tech index? So the leading stocks on the Hang Seng Tech are basically Alibaba and Tencent. And Alibaba basically had the number 2 model in the world. See, that's QN, right? QN 32B preview. It was better than the Cloud Sonnets, right? And the ChatGPT 4. Whatever. This was like a few months ago, right? When they had the Cloud Sonnet. But instead of focusing on developing their AI, what does Alibaba do? Because they're a big retailer, like they're kind of like Amazon in China, so they decide to get into a price war for food delivery. The number 1 food delivery company in China is called Meituan, which is this stock, right? And they, rather than focusing on AI, we can see that the blue line's Hong Kong Tech Index, and basically as Alibaba's fallen, it's taken the whole index down, because then Meituan needs to fight them in the price war. And also JD.com, which is another big retailer, also comes in. So you have now 3 of the biggest stocks in China, in the Hang Seng Tech Index, doing a price war against each other, not on AI models, but on food delivery. On food delivery. That's how retarded it is. I've said this a number of times in my Discord. I said this is retarded behavior, right? When someone else, a new startup, just focused on AI only and then took off. And that's what I've been talking about also since Feb in my Discord. I said, look, there's this new company called Zhipu or Knowledge Atlas. They've basically gone up like 30 to 20x since they launched, right? They're the next Bitcoin. They have the 2 of the top 5 AI models in the world. But I do think the Hang Seng Tech Index has now actually bottomed. Okay, thank you for your time, guys.
The real breakdowns happen in the Discord, not on YouTube. If you're serious, the link's in the description.